But first, a chart. It compares the current downturns in Europe and the United States with the Japanese depression that started in 1991 and is now 21 years old. The chart lines up the starts of the three recessions: Japan in 91, America in the first quarter of 2008, and Europe in the second quarter of that year. Now, the initial decline in GDP growth in Europe and America was much greater than in Japan, and then the V-shaped recovery was much stronger. Europe, though, is now fading fast, while US GDP is holding just. The question that's on everyone's mind now is what happens next, because whereas Japan's depression didn't drag down the whole world, Europe and America would. All of which is why the share market has now had its sixth fall in a row. Not a big one, just drifting lazily down like a sinking balloon. Iron ore producers suffered the biggest falls today, especially Fortescue, and the banks all fell except for Westpac, which bucked the trend. So did CSL. And Telstra went down a bit, even though it managed to sell out of New Zealand for about 200 million more than it expected to get. Vodafone paid $660 million for Telstra Clear. Most global markets drifted lower again, and the protests in Spain didn't help the mood much. But most of the commodities went the other way, although if you look back over 2012 as a whole, commodities have performed much worse than global shares, which is a key reason, of course, why our market has done worse than the others. Resources stocks have dragged it down. The resources share index on the ASX has actually fallen more than the commodity index, which in turn has performed worse than the global share index. And finally, the Australian dollar has gone down a bit, back into the 101s. Meanwhile, the euro is continuing to fall against the US dollar. And that's finance.